Good morning and Happy New Year. Happy 2024. I am April Chadwick.
Happy 2024. I'm Diane Gertis.
And we're with the Mortgage Advantage TMA Corner. Happy 2024, everybody. Woo! How's your New Year's been?
Oh, it's been great. Yeah, it's been an interesting 3 weeks. So I guess it's only been 2 weeks, seems much longer. But yeah, no, it's been exciting. It always is the beginning of the year.
Absolutely.
The world is our canvas. So but to start off, yeah, that's true. To start off, I would like to give my condolences out to David Stevens and his family. David Stevens was an advocate for all mortgage lenders. He passed away unexpectedly earlier this week. I highly recommend, if you have a chance, to look him up and see all that he accomplished. In all that he did for the mortgage industry in his short time here. And he will be missed.
Yes. Always a person. He was always a great resource. I found that any publication or anything he put out was always a great resource for a lot of things in the mortgage industry.
Common sense.
Yeah.
He had common sense and a very generous man with his time. Today I kind of like to go over escrows. And escrows is one of those, we're going to go over escrows and a little bit of title, just a teeny bit. But escrows is one of those English words that has several different meanings. And I'm just going to go over 2 of the meanings today. But escrows in our industry in mortgage industry, mean property taxes and home insurance. The other word for it is impounds. So as far as your closing cost for buyers, they are divided into 4 different areas. One is lender's fees. Be sure to check those out. Lender's fees. Then you have title fees. Those are completely separate. Mortgage companies do not choose the mortgage company on a purchase. And your impounds. In other words, your property taxes and homeowners insurance. And that's what I'm going to go over. And then the other part of your closing costs, just throwing it in, could be homeowners association upfront fees and days of interest from the day you close to the first of the month. So just saying, but the impounds are a big part of the closing costs. Impounds or escrows are what impounds and escrows are, if they're part of your payment, they are the property taxes and homeowners insurance. At time of closing, even if you're paying cash for a house, you're required to buy insurance. And if you're mortgaging a home, the homeowner's insurance, the first year is part of the closing costs. In other words, you pay for the first year up front, part of your closing cost, and as lenders will estimate that, you go and get that through your own provider. And that is paid at time of closing the first year. Then as part of your payment, 1/12 of that is collected, is part of your payment and collected and put into a escrow/impound account. And then when that homeowner's insurance bill comes due, the lender pays it. You don't pay it, or the buyer doesn't pay it. Same thing with property taxes. Property taxes are impounded, and then they're put into the escrow account. I know it's confusing, but that is every month you have part of your payment is your property taxes and your homeowner's insurance. And that is why that is another term for escrow or impound. And again, the lender pays those on your behalf, but they are collected as part of your payment. Do you have a question, April?
No, not at all.
Okay, I know it's pretty boring. Don't know how to make it too exciting, but I've had some questions on it, and it is a little confusing. But this is one of the standard ways of doing business in the mortgage industry as far as a payment. Now you may ask, do I have to have my property taxes and homeowners insurance impounded? No, you don't. But there are some stipulations. For instance, FHA, VA require impounds or property taxes and home insurance to be escrowed. Some conventional loans, if you're putting less than 20% down, will not allow it. But usually, if you're a conventional loan putting 20% down, lender doesn't care. And therefore, and once a year, for the impound account at the lenders is audited. They're highly regulated. They're not making money off the account. It's not like they're gonna take your money and then go spend it. It's highly regulated, no interest, it's not interest-bearing accounts. So at the end of the year, you may get a bill. I say a bill. Let's say your taxes have gone up. Either they may give you the option of paying that difference between the difference in the taxes increasing, or your payment go up. Also, if I may, insurance, home insurance, you can call 5 different home insurance companies, all the national companies, and get 5 very different quotes. And on home insurance, I would recommend doing a deductible of at least $1,000, maybe $2,500, because you do not want to use your home insurance unless you have a pretty serious incident, like your roof is blown off or you have a flood that covers the entire home. Because anytime you use the insurance, even if it is for a very serious incident, your home insurance is going to go up after you use it. So just some
Or you may
things
not even be able to get insurance from some places if you filed a claim.
That's correct. And as you've heard, you may or may not have heard, in Florida, they're having a terrible time with home insurance now because of the amount of flooding and hurricanes. So just
or even look at how expensive and how hard it is in California with the fires.
Yeah, for the fires.
Yeah.
So that is kind of an irritating thing that we have to. I call it irritating because if you ever shop for insurance, it is not fun. I mean, and also negotiate. You can call back. I had a client that had gone to a major company and he was determined to stay with him. I go, well, call him back, just see, because it was really high and he hadn't had any claims, and it was a single level house, 2,000 square feet, and it was like, I don't know, way. And then he called, he goes, oh, you're right, they came down on it. Still not as low as I thought it should be, but I have to stay out of it. I don't sell insurance, so just saying. The other, you say, well, what other word for escrow is used in our industry? Well, to make it really confusing, escrow is another term that the title company uses, but it has nothing to do with insurance or property taxes. It has to do with the transaction. For instance, you'll hear the term, well, we're going to open escrow. That means that there is a fully executed contract on a house, and the realtors are going to take it to the title company and open escrow. And the title company, from that, once they open escrow, then it's up to them to do the title work to make sure that there are no judgments or liens on the house. And after it closes, and all lenders need a clear title. No one's going to lend on a house that has a cloud on the title or something funky like an IRS lien, or anyway, I won't go into title work.
Well, the preliminary report, yeah, we get that, and that shows anything that's on the house.
Yeah, you'd be surprised. It doesn't happen that often, but when it does, you're like, what? So got a lot of funny stories on that. Or maybe you won't find it funny, but I found it funny. So that's the other escrow, a little bit of a confusion on that. So just a quick overview on what impounds or escrow is, as far as in our industry. And if you have questions, feel free to call your lender or call April or I, and we can certainly go over it for you.
And then just to clarify, I think all that, just to clarify, as Diane had mentioned, cash, when you pay cash, no matter what, you still have to pay for your property taxes and have home insurance the first year. But after that, just to clarify, with cash, people, the impounds.
Well, just to go back, let me reel that back in. If you're paying cash for a house, you don't really have to have insurance.
Well,
You
that's
don't-
really stupid
You
though.
don't have to have
Sorry.
insurance. You may have heard about some of the people in California, because California, up until the past 10 years, this was about probably 15 years ago, had let a lot of people had let their home insurance lapse that lived in these magnificent homes, figuring they could self-insure. In other words, something happens, they could take care of it. But little did they know that when their 10 million house burned down, it was going to cost $10 million to, to build. So therefore, you don't have to have insurance, but wow, I can't imagine someone not having insurance in this day and time.
And in Arizona, when we had the rodeo, however fire you, Jadeski, I remember that fire that so many, there were a lot of retired people that their home was free and clear and they just didn't think to get homeowners insurance, and, fire comes through and, homeowners insurance is, it's one of those things, you just got to do it.
Yeah, it's recommended, but you don't have to do it. Who knows? If you've got $1 billion in the bank, all right, we're good. But property taxes have to be paid no matter what. If you don't pay your property taxes, they could actually, people had bought homes for, people that have purchased homes with paying the back taxes. Well, and so just, you probably need to pay your taxes too.
Well, and on my end, I just have to say I'm one that I'm always the least amount of things I can do, the better. So we are in the mortgage industry. So obviously we work with people that have mortgages. And if I don't have to think about paying my homeowner's insurance or taxes, that's great because my lender pays it for me because it's funded. So that's for me, I enjoy that. So,
but still, and going back on that, you probably still should at some point, at least maybe once a year, or when your insurance renews, like this past time when our insurance renewed, I went, what? Because it went up $500 a year. And I went, why? We've not, we don't have a big house. We don't, why? And well, he said, that's the way it is across the board. Everybody's insurance gone up. Okay. Well, guess what? That was not the case. So I'm just saying, just be careful on insurance.
Always do your due diligence. Do your due diligence with every, insurance, with your own lender,
With lending too, correct. This is, like I said, you never know what fees they may have, just, I don't know, just as we do found, as we found in all aspects of life, right?
Yep.
So anyway.
But and then as we have always said, we are so available. We're here. We thrive off of the knowledge and helping people. And please call me or Diane at any time. That's what we're here for. And Diane, your phone number is
480-235-5667. And just a shout out, we appreciate all our clients and realtors, and we're here to serve. So
absolutely. And happy New Year to everybody. Yes, we look forward to hearing from everybody, and I hope everyone has a great week.
Take care. Bye.